Good morning, Steve Ray in Chicago with the morning grain comments. Volumes down because of the approaching U.S. holiday, and I think overnight we've seen kind of a choppy trade. Corn now a little bit higher, wheat and beans about unchanged. I think that when we look at some of the headlines, certainly the COVID cases increasing, lockdowns increasing in China has offered some resistance to commodity markets and fear that China may import less commodities. Yesterday was kind of a wild day in crude. There was a Wall Street Journal article about Saudi increasing oil production. They quickly came out and denied that. And so you went from $72 crude to now crude's about $80 in a really short period of time. And so that's something that I think is helping the corn market, maybe helping the soybean oil market as they follow that market's higher. Still in the background, I think that you've got some concern that the Fed will increase rates, which is potentially bullish to the dollar and negative to commodities. And we'll be watching also domestic disposable income, what the consumer buys as far as, Thanksgiving dinners and cost of those dinners higher, plus the retail sales for Christmas, and just see what that impact has on retail gains, and also food demand and fuel demand. Weekly exports in beans were down 10% from last year, while corn is down 30% and wheat down 2%. So that's one thing in the background too, is that U.S. is losing export share in wheat to Russia, corn to Ukraine and South America, and in beans, South America. We also note from a weather standpoint, still dry in the southern plains. A lot of debate going on right now is actually how much rain Brazil is getting. I think they're getting enough to get the crops planted, but maybe need more to get that record crop that people are forecasting. Plus Argentina remains dry, and there is hope that they could start seeing better chances of rain. Southern plains, again, not a lot of rain forecasted over the next 30 days, but should improve after the first of the year. Motif rapeseed at 8-week lows. Canada's estimating their canola crop in 2023 at 19 million tons versus last year's reduced drought of 13.8. And in the United States, we have to deal with the possible railroad strike and what impact that might have on domestic grain basis levels, which should go lower if there is a strike, depending on how long that is. Ukraine's got 50% of their corn crop harvested. They may leave the rest of it in the fields, which could reduce the amount of corn that, number one, they export, but number two, they can plant in the springtime. And then we have in the wheat market talk about some cargoes of European wheat coming into a West Florida mill. Prices of that wheat's about $80 a ton cheaper than U.S. hard red winter wheat. As always, these are my thoughts and not those of ADM Investor Services. Have a good trading day.